Should we move on to Valvoline?
Let's look at Valvoline.
Yeah, it's so hard to look at that symbol. It's VVV. It looks like a W and a V or W. It's just very hard to look at. But the Valvoline, their symbol is VVV. Now, I'm surprised, but they're in the auto and truck dealership industry. I thought it'd be more in the energy industry, but I guess because they're used for cars. They do have a little bit high on the flow side. It's 9%. We do see a PE ratio of 18.3 versus not material for the industry. Price to sales, 2.3, well above the industry at 0.5. Price to book value, also expensive for Valvoline, 11.5 versus 2.9. Price to cash flow does look better, though, 13.2 versus 14.7. And the PEG ratio, well, for Valvoline is about 2.6 versus 3, so about the same, we'll call it. Now, over the past year, Valvoline has seen their earnings increase by 2.5% when the industry was up 41%. Sales for Valvoline of 5.6%, closer to the industry at 6.5. And then the 5-year earnings per share growth estimate for Valvoline is 7.9 versus 18.4. So seems to be a decent business with some growth there. Unfortunately, now this is surprising to me. I thought this would be a company that would pay a dividend, but they do not. They do not pay a dividend at Valvoline. Taking a look at the balance sheet, current ratio, little bit on the low side, 0.7 versus 2.2. Here again, another high debt company, 4.1 versus 2.8. I will check the balance sheet as well to see if the debt is high and or the equity is very low. We do see that the net profit margin for Valvoline very good, 12.3 versus 1.8. And the return on equity, this kind of tells me probably the equity is low. Return on equity is 62.3, and then the free cash flow only $38 million versus $354 million for the industry. Chase, what do you got?
Yeah, I was gonna say, I love this company. Do you use Valvoline? Do you go?
I used to, but not because my Cadillac's getting older. I go to the dealership so I can check other things. But I used to go. I think it's the Valvoline on the corner there.
It's so easy.
Yeah,
they do a great job. And my new car gets free oil changes, and I'm like, I still might go to Valvoline because when you go to the dealership, the oil change still takes long because you got to drop it off to service. Generally, it's more impacted where you get in, you get out in like 15, 20 minutes. It's like it might be worth the $100 to make it quicker for me.
Yeah,
but. Anyways, I like the business. The question is, do you buy the stock, though? Current price here, $30.50 for Valvoline, and their ticker symbol VVV. 52-week range low here, $29.29, and the high, $41.33. So hasn't been a great year for Valvoline. It's down almost 20% over the last 12 months. Going forward, though, for the company, we go up to September 2027. Estimated earnings per share here, $1.97. Gives us a target sell price of $32.70. So I'd say it's essentially fairly valued based off of those earnings. We're not getting, less than 10% growth, essentially, on the estimated sell price to the current price. So it definitely would be a buy, especially with that balance sheet.
Yeah, and I did look at the balance sheet. The long-term debt is $1.4 billion, and that's down from $1.9 billion about 3 years ago. But the equity is low. It's $339 million, but that is up from $289 million 4 years ago. So, like this company, I think you'd have to have more of a decline in the stock to buy it. Maybe a slowdown a little bit in the economy. Again, like you, I want to like it, but this is why we look at so many companies. It's got to be perfect. You can't make an excuse to invest in a company just like, but I really like it. I don't care that the debt's kind of high. No, You can't do that. You got to say, nope, sorry, Valvoline. We got to move on and look at something else.
Yeah. No, I mean, it's definitely something you got to be disciplined with.
Yep. And that's the hard part about investing for many people. It is very emotional, and you've got to leave the emotions at the door, because if you don't, you're going to have terrible times.